Okay. Hey, everybody. Welcome to today's session. In today's session, I'm going to be talking about Gbpusd, backtesting it. Also, by the end of the session, I'll be talking about what's my take on MyForex Funds. So if you want to know what's my take on that, we'll have to stick until the end. So obviously, as you understand, before we start doing the backtest every day, we have to start first looking at the stats. How did we perform for the last 3 months of this currency pair? So with Gbpusd, these were the stats. For the last 3 months, we only took 3 trades. 2 of them, two were in July, 1 was in August. So in June, we didn't take any trade on Gbpusd. We had 1 loser and 2 winners. Both of them closed at 3R, which gave us 6R. Minus that, we get a 5R with a 66% win rate. So Gbpusd, we do notice that with our trading strategy, it's a profitable pair. It may have few trading opportunities, but still, it gives us great results. So we are obviously going to be looking at how can we get more trading opportunities in this pair, because we understand it actually resonates more with our strategy because it has a very high win rate. So that's what we're going to be doing today, seeing how we can actually capture these moves on Gbpusd. All right, so we're going to start back testing from June, obviously, as we understand. June, here's May, June, right there, the 1st of June. So we're going to start back testing right there. Gbpusd, what's up with it? All right, so Gbpusd right now, here's the daily time frame. Obviously, I always like tracking my analysis from the higher time frames so that I can get a bigger picture of what's really going on. So let me remove the drawings. All right, so far, if you look at it, what's popping, what's going on, like what's your take on it? If you ask me right here, I'll say the market's in a downtrend, because you see prices had that high, created a low, we had a lower high, same low, same high, and then prices created a lower low, so it broke below this structure. Then after that, we are in this kind of a retracement move. So long-term bias, if you ask me, I'll say Gbpusd is still in a downtrend. I'll change my bias once prices break above this high. Then I'll be like, okay, the bearish trend has ended. But that's my long-term bias. All right, so we're going down to the lower time frames, the weekly, obviously, to see how prices are aligning with our bias. Now, once we go in the lower time frames, we start looking at what's really going on in the lower moves, right? So here on the lower time frame, our long-term bias is obviously still bearish, but this short-term trend, it's still bullish, because if you look at the prices, they created a high, lower high, higher low, higher high, same high low, and then prices created a higher high, breaking above these structures. So in the lower time frame, the trend is still bullish. So that means that retracement from the monthly, this one right here, this right here, it hasn't finished retracing it, because the trend on the lower time frames is still bullish. So with that in mind, we can see the weekly closed with a solid bullish and bullish railing, right? So that gives us a bullish bias. Okay, so we have a bullish bias, but where to? Because we need to know where prices are most likely going to push to, so that we may have our target, right? So right now, prices bounced off this structure here, and gave that retracement, created that bullish trend. So that means it's most likely that prices, if they break above here, they're going to be pushing higher until they reach on this structure right here. So that'll be our next target. I'll be like, that's what I'm aiming for. Then we can go to the lower time frames, the daily, looking for the daily structures, so that we can start looking for start looking for possible entry structures and all that. Hey Federico, don't worry brother, we're just getting started. So this is the daily structure. So these were the most recent highs that were broken. And prices pumped higher. So I'm going to cover it like that. And I remember when I always tell people while drawing structures, always cover the wicks of the most recent turning point. So this was the broken structure, but you can see I haven't covered their wicks. What I did is that I've covered the wicks of the most recent turning point, because this is the structure that's now in play, not this one right here. So that's why I've covered like that. Now we can see prices created a higher high, tried to push lower below this structure, and then got rejected, and now it's looking as if it's pumping higher. So yesterday's candle, we can see we had that solid bullish push, and today's candle we had a bearish move. It didn't go lower than yesterday's candle, and then it closed bullish. So that's an indication that prices were just retracing on the lower time frames, and now we might be continuing to be bullish. So with that in mind, I'll obviously be going to the lower time frames to look for more selling confluences, but out here I need to try and look if I can actually get even more confluences. Like, does the trend line align? Okay, so the trend line doesn't really hit it. How about from down here? So from down here, I think it will have already been broken. If I use that low, the prices will indicate that the trend line has already been broken. Now, in a scenario like this, how do you actually understand? Are you going to look for a sell here, or are you going to look for a buy where the prices have actually bounced off and they're trying to push higher? The way you actually figure that out is by looking at the trend. Don't look like these support structures, trend lines, Fibonacci's, all of these tools just help you analyze the market. But what's very important, like above all that, is the trend. What is the trend? If the trend is bullish, look for confluences that support your bullish bias. If the support is bearish, or if the trend is bearish, look for confluences that support your trend. So right here, I'm going to be depending on the support. This trend line, I won't consider it valid because it gives me, or it introduces the idea that's contrary to my bias. So I'm going to ignore it, right? Okay, so because the trend is bullish, obviously we have a low here, highs, prices creating higher highs, same highs, and then prices broke above that. So this is most likely going to keep on being bullish. That's how I'd analyze it, right? Now from there, we go to the lower time frames, the 4 hours, to look for the trend change and the confirmation candlestick. All right, so this is how the 4 hours looking like. Draw a trend line, perhaps something like that, so that it can indicate when the trend has already been broken out. So prices look like they created an ending diagonal pattern, by the way. So this would have been considered a retest. This can't be an end confirmation candlestick because it hasn't engulfed this bearish candle. Same here, prices still hadn't engulfed the bearish candle until here. Then you can actually say like, okay, cool, now I can actually start looking for bullish trades because prices have closed above the most recent high. Now from there, obviously you can go to the 1 hour because you already have a confirmation on the daily and the 4 hours. So on the 1 hour, you just need to look for confirmations, entry confirmations. So I can cover the most recent high like that, and then should prices break above here and give me a retest, I should be looking for entry trades where the targets so these are where I believe prices will keep on pushing to, but I'm not going to be aiming for there because it will be a very long trade, and as I told you, I'm nowadays a day trader, so I might try to swing it because sometimes I may hold a trade for a day or two, but I wouldn't hold it all the way until there. Like, I'll try to look for another entry, obviously, for prices until they reach there, but currently this will be my target. So once we go to the 1 hour, I'll be aiming for that first. Now I'll be looking for a break and retest for me to take my trade. Okay, prices are being rejected, pumping higher, rejection. Okay, so prices look like they're having a hard time breaking there. Okay, some crazy momentum kicking in. Prices have broken above the structure. No retest. Jesus. Okay, let's pause right there. So you see here, prices were having a hard time to pump above this, got rejected back down here, and then just took off without retesting this structure. Okay, so up here we have to acknowledge we also have another structure here, and prices have broken above that. So right now prices may have two choices. If they're going to retrace, they might retrace to this structure, or they might retrace to this structure. We do also have another structure here. GU has a lot of structures. All of these are minor structures where prices may retrace to. But how do you know which price or where prices are most likely going to retrace to? Obviously, you most likely need to use the Fibonacci. So we have this. It's obviously a very strong trend. So most likely prices are going to end up at the 0.38 Fibonacci key level. If they dump even lower, it will be perhaps the 0.5. So the 0.38 is somewhere here. The 0.5 is somewhere there. So these, like, I don't think prices will reach the 618, but let's see how it plays out. If it will even retrace. Okay, prices dumped crazy. They've reached even 1.618, retraced all the way to this structure. Like, you remember this structure? Crazy. Where they just broke clean. That's where prices have retraced to. By the way, you always need to be adjusting structures. So for instance, right now, you are covering the wicks of the most recent turning point. So which will be that? Because this is where prices turned around the last time, and right there. So you can see prices retraced all the way until on this structure. So these 0.38, 0.5 were both taken out, and I think prices did ultimately end tapping out at 0.71. I wasn't expecting that, because I really saw this momentum and I was like, prices will be having a hard time retracing all the way back here. But they did. Crazy. Okay, so 718 will be just looking for a bullish confirmation for us to take that entry. We'll be looking for that bullish confirmation to take that entry. Let's see now. The bullish confirmation. Mind you, this is the 1 hour. Okay, prices have dumped even lower than 0.718. So this no longer valid. Excuse me. Okay, so it dumped even lower to 7.8. Insane. It dumped even lower to 0.78. Okay, so right there. Okay, so am I still bullish biased? Yes, I am still bullish biased. Why? Because the trend is clearly still bullish. You have lows, highs, higher lows, higher highs, higher lows, higher highs, and this may still act as a higher low because it hasn't broken below this most previous low. So prices are most likely still going to be pushing higher. That's why I'm still bullish biased. But that trend line, that support structure right there has just been broken clean. so I'm not really going to be depending on it. So far, this is now a C3 trade. Do we have any structure here? Minor, very minor. Like this structure that was backtest, like that was those prices bounced off here. You see the rejections from there. Prices reached there, became bullish, then broke below. That's the structure that's prices are hanging on, but it's a very minor structure. That's a very minor structure. Okay, so what's going on the 4 hours? On the 4 hours, prices have retraced all the way somewhere here. Trend still clearly bullish. All right. So what about the daily? Daily prices reached on this structure and then rejected. Right? Yeah. Prices reached on this structure and then rejected. This bearish candle closing on below the bullish candle. That's a risky move. Okay. So for us to take a bullish trade here, so if we got the confirmation from way back here when we are looking for it, we could have taken the trade, right? Because everything was bullish from the daily 4 hours. But if you look at right now how the market is, look at the previous daily candle. It has almost engulfed this bullish candle, this bearish candle. And then the following candle has closed at the same low as this bullish candle, making these two candles a bearish railing of this bullish candle. So it's as if the trend has, changed to the downside. So I'm not going to be looking for a bullish trade right now until I get a bullish solid candle right here. And I need to see the confirmation on the 4 hours. So I'm going to start watching again the 4 hours. I want to be looking at the trade from the 1 hour perspective because I'm not looking for entries. I'm looking for a confirmation because the trend is still bullish here. It's just that the confirmations are the ones that are now bearish. So I'll just be looking for a confirmation again, and then I'll go to the lower time frames to look for entries. Okay, crazy. See what happened? Prices just became mad bearish, gained that bullish trend. Okay, so prices are now pushing, trying to push lower, back up higher. Okay, a new high. So looks like the trend is creating a correction, insane moves. Let me pause. Let's go back to the daily. So you see here, prices on the daily came back with a doji, this bullish doji right here. So every day when you wake up, guys, I hope you make this a habit. Every day once you wake up, look at the daily candles. Like before you even start looking for trading opportunities, look at the daily candle. How did the daily candle yesterday close? If you see it close with some kind of a bearish momentum, understand that today's candle will most likely continue the bearish momentum. If it was on a support structure or resistance structure, that even gives it more power, right? But always make it a habit to first look at the daily candle, understand what happened yesterday before you make your anticipation, before you make your moves in the market that day. All right. Now, once you make that move, once you get that in lock and then you mark your move, like for instance, here you see prices were bearish, lost their momentum, and then look at this doji railing candle. I don't know if it's a bullish doji. So you can see after it formed, it indicated the bearish momentum is now completely lost and the bulls might kicking anytime. And look at the following candle. Insane move, insane bullish pressure. So if you saw this, you could have anticipated this crazy bullish power, this bullish trend, and actually capture the move, right? So make it a habit. Like try your level best. Right here we didn't use the Fibonacci. So it would have been like that. Okay. So for instance, you started looking at it from a daily perspective. Maybe you are there. Let's see if we can actually capture a move, right? So for me here, I still wouldn't have taken a move. I remember seeing how this played out. It was very messy, very choppy. So here is where the doji, I think, just formed. Bearish pressure again, some kind of a bullish power. Okay. Right on. So obviously for us, we didn't catch this trade. We didn't take this trade. This is about the 8th of June. Let me see. The trade that we took was in July. We didn't take any trade in June. So that means I'm trying to figure out how could we have caught this move? Because in GU, what we're trying to improve is the way we actually capture trades. We understand that our system is profitable in Gbpusd, but we just caught very few trades. The last 3 months, we had 3 trading opportunities in it. So we need to see in places like this. Like for instance, you've seen me watch this the first time. In this move, we were anticipating a bullish move, but it took off without us. Now, how do we make sure that we capture such moves, right? Like for instance, this pump here, how can we catch this pump, right? So obviously, we need to first see a change of trend. So we had this kind of bearish pump. Prices created a high. In regards to this, it will be a lower high, and then prices created a higher high, a higher low, and then a higher high. So that means the trend is back bullish. So we need to see a higher low. But this bearish candle needs to be engulfed. The only candle that did that was this one right here at 8:12. So that means what candle formed at 12? Okay, so this was 11, this was 12. So we should have been looking for an opportunity after this move right here, because this is the 12 candle, like the candle that closed in noon. And even from the 4-hour, we see the trend has already changed. With this candle here, we see the trend has changed because it has closed above this bearish candle. So we need to look for a bullish trend. We need to look for a bullish trade that will take us. For me, I'll be looking for a trade to push me until this most recent high. That's where I'll be aiming for. So I'll obviously come to the lower time frames because I have the confirmation, and the following candle closed crazy bearish, and then prices started pumping again. I would have taken my entry on this candle here because it has engulfed this bearish candle. So let's see if the risk to reward will actually be worth it. So I'll take maybe my buy there, aiming for that high, and my stop loss below this entry candle. It will give me 2.79. It isn't 1:3. It isn't 1:3. Okay, so if I squeeze in more, let's say I aim for that high, still, dang. Crazy. But obviously with the spread and the commission, because this is exactly 3.1:3, so with the spread and the commission, we'll obviously make about 2.9 or something, 2.8. But that's how I believe we should have taken opportunity of this trade. So obviously we were very conservative while looking for these opportunities on GU, because GU, any pair that has pound is very volatile. So for us looking for entries, being conservative, I think is what made us get only 3 trades. If we were a little bit more aggressive, we would have caught moves like this one that we didn't catch, because we already knew where the trend was going. We already had the confirmations on the daily and the 4 hours. but the entry on the 1 hour is where the tricky part came. So we were being too conservative. And I've seen this with all the pairs we've backtested, like some of them in EU. We saw it in Euro JPY. We saw it in was it USD JPY, I think? So we were being too conservative. Now, that's something that we'll obviously improve on. If we already have a confirmation on the daily and the 4 hour, we can be aggressive with the 1 hour and the lower time frames, because the higher time frame confirmations will most likely push the market in our favor. Very few times I believe we'll be stopped out of those trades, because the higher time frames are what influence the lower time frames, right? So in a scenario like this, we should be taking trades like that by being a little bit more aggressive if the trend has already indicated that it's most likely going to keep on pumping in our favor. Okay, so in a trade like this, first off, I think I would have already been tapped out, but right here I would have already been tapped out. Like, my take profit will have already been hit. The trades in which I always leave hanging are the ones, for instance, the example I said, the trade is 1:7 and then it reaches 1:3, and then I start looking at the momentum. Should I keep on holding or should I just close it? But these ones right here, the take profit will have already been hit. So I don't think I would be able to even think about making that decision, because I already have been, my take profit will have already been hit, Federico. Yeah, if my original take profit is hit, I don't make any changes. But if my take profit is, let's say, 7 hour, 8 hour, and I see the trade is starting to show me some wavy moves, I'd be like, okay, this is it, I'm out of here. I close the trade. But if the original TP is hit, no changes. So yeah, thank you for the question. Now let's go back again. So we already caught that move. Let's go back again to the daily. What's going on out here? Okay, so on the daily, we see that prices are still very much bullish. They just broke above this high. So obviously, what's the next plan? The next plan is hitting the next high. Because remind you, I trade structure to structure. After one structure is hit, I believe the following structure is what's next. So I try to get my hands on a trade that will take me there. So the previous structure that has been broken is this one right here. The daily already gave us the perfect confirmation. This is the 4 hours. We have a structure. Clearly the trend is bullish, structure broken and retested. This one right here will be our confirmation candlestick. What we need now is to go on the lower time frames and get our hands on the entry candlesticks. So right here, prices have already broken above that, indicating a very strong bullish momentum. The 1 hour looks neat, but I think I'll be looking for my entry on the lower time frame, like the 15-minute, because the 1 hour big candles have been formed and it doesn't really look welcoming. It's not that welcoming. Okay, so prices have broken above there. I'll be looking for some kind of a retest. Okay, so no, I wouldn't take it there. All of that is still some kind of, now if prices push from there, that will be a retest. I wouldn't consider this a retest. But if prices pull back from there and then give me some kind of a retest, that's what I'll consider. All right, so it looks like prices are retracing, not really retracing, but correcting. Woo! And then we got our retracement. Okay, so let's pause. How's the trend still looking? So the trend still hasn't changed. So you see prices are being rejected from closing below this low. So let's see how it plays out. Prices are just extending, ranging a lot, not really trending. Okay, so prices have managed to close below this structure. So now we are looking at that. New trend has been formed. This is the 15-minute. So you see prices came back down here, breaking below these lows. So the trend had been bearish, and then prices created a new high, retested here, broke above it, going back to being a bullish trend. So from there, we can't just again pull the trigger from there. We need to make sure that still on the daily, we are still on the same page. So obviously the trend is still bullish on the daily, and this bearish candle hasn't yet engulfed this bullish candle. So the trend is still clearly bullish. What about the 4-hour trend? 4-hour trend still clearly bullish. So no harm done. Break, retest. So we just need to get our hands on a crazy. Let's see this trend line. In the trend line, you can see prices have broken above this trend line and given us a retest. So we just need to get our hands on that bullish candlestick and we can take our trade. What's going on now? Jesus. GU has some crazy impulsive momentums though. Look at what it's doing to us now. Okay, so prices have broken above that. So we'll be looking for a retracement on this one right here. Hold on. Let's see how the 1 hour looks like. Okay. Remember what I said? We need to stop being conservative and being aggressive. Guess what? The time is now. So prices broke above here, gave us a retest, broke above here, gave us a retest. We are going to use this as our confirmation candlestick and our entry candlestick. But we are not going to be taking it from the 1 hour. We're going to be taking it from the 15-minute. Long position, entry there, stops below the entry candlestick. We are being aggressive. 1 hour, it looks like the stop will be below the low. We'll be aiming for this high. Does it give us a reasonable risk to reward? Yes, it does. 1:4.3. We're in. How many pips are we risking? We are risking about 14 pips. So the moment we hit 16 pips, we need to be break even. Let's see how it goes. Okay, bearish pressure, a loss of bullish momentum, and we have been tapped out. We have been stopped out of this trade. Sheesh. Prices didn't go our way, and then we just got stopped out. No harm done. We followed the rules, we just got stopped out. It's one of those trades. I see, JJ, you have also asked why I don't take the trade on the first, or why I don't consider it as a retest. Where was that place again? Okay. I don't, was it somewhere here? 15 minutes? Right here. Yeah, so I wouldn't take this as a retracement, because even if somebody asked you, like, in this move here, would you consider prices have extended and retraced? Like, until here. In this move here, if somebody just asked you, by looking, can you say that prices have extended and retraced? The answer, if you're really honest with yourself, it will be no, because prices have just extended. So this, I won't consider it as a retest, because this is just a minor correction on the lower time frames. But on the higher time frames that we are watching, this is actually the 15-minute. So it's uneven. It's by itself, it's a lower time frame, and prices haven't given you a retest. So it's very risky to take or to consider this as a retest. I really wouldn't consider it as a retest, because it's not. But once prices are advanced, like what they did here after breaking below here, that I may consider a retest. Once that, this is a break and a retest, but this right here, nah, it's not. So let me fast forward so that we can go back to where we were. So yeah, we just took a trade and we got stopped out of a trade. It happens, no big deal. So okay, here we are. How can we say maybe, or do, how could we have avoided this trade? Okay, so, or how could we have managed it better? Okay, so prices pushed, started ranging, didn't break below this low. So there was a low here that prices respected, I think, right here. Yeah, so there was a high, prices broke above that, pumped all the way until below here, below on this structure, and then just flashed through. So how could we have managed it better? If I say we should have maybe closed the trade if prices broke below this low, that will be too aggressive, because the most recent breaking point or the most recent structure is then here. Because if we shouldn't consider that too much, we should be considering this. So once prices reached here, maybe then we should have considered this low, but then it's just about a pip to our stop loss. So what really are we changing, right? So in my opinion, this is just one of the trades that you take and it hits your stop loss. We couldn't have traded or managed it any better without being too aggressive. So it's just one of those trades. We hit a stop loss, we write it in our journal, and we move on. Mm-hmm. 4 hours. So how is the trend now looking in 4 hours? So the trend in 4 hours is looking very bearish right now, because we had this as the most recent low and prices took that out. So what should we be anticipating? Okay, this I may consider it as a minor trend though, because if you really zoom out, what's the trend? You still have this is the low, this is the high, this is the low, this is the higher high. So I may still consider this as a minor trend, because if you really zoom out, you get that bigger picture. And how's the daily looking? Yeah, so the trend is still bullish, but the confirmations are bearish. So we just need bullish confirmations before we actually make any more moves. Unless the trend changes to being bearish, then we can start looking for sell opportunities. Okay, let's pause all the way until prices broke back above here, right? So this bearish candle, I wasn't going to look for any buy opportunity until this bearish candle is fully engulfed. And the candle that engulfed this bearish candle is this bullish candle. So from here, should have probably been looking for continuations of the buy trend. Looking if this will actually correlate with some kind of structure on the 1 hour. See how it fits there, and on this previous structure back here. So this structure here aligns with this structure here and with the most recent point, something like see that 1 2 3. Anyways, because how would you have known where it's turning around, right? You need to get some kind of confluences. So once it happens, you obviously add on more confluences. So I'd consider this whole move as an impulsive wave and this as its retracement. So I need to see where it actually fell on the Fibonacci. Was it the 0.5 or 618? I'm not sure. 0.5 was violated, 618 didn't hold up. Okay, so that's on the 1 hour. On the 4 hours, at least 0.5. Or if we pull it down like that for this beginning. Right. So our entries, we should have been looking for some kind of bullish entries right here to continue with this trend. For me, I'd say my target be aiming there. 1 hour. Prices just pumped like that. Crazy. Okay, so with this impulsive break, with that impulsive break, some kind of a retracement to give me that continuation. Okay, so no retracement. No, I wouldn't use this as a confirmation because this bearish candle is still too large. Even if I did, the push to reach here, it will be less than 3R, so it's not really even worth it. Okay, prices have tapped our levels, our take profit levels, and they look like they're pushing higher. Jesus. Okay, a pump, retracement, a pushback, a pushback. Where are we looking to look for trades? Let's pause that. Let's look at it from a 4 hour. Okay, so the 4 hour, we have that bullish confirmation that prices have broken above here and retested this structure, right? So it's a break, retest. Where should we be looking for exit points? Let's throw in the Fibonacci extension. Okay, so we had that at the beginning, that at 1. Now we see prices almost reached 1, retracement almost there. So our targets, I'll be aiming for somewhere there. Now I have to look for some kind of a market structure that aligns with around where 1.618 is. In order to not be doing guesswork, you need a structure that aligns with where the fib tool is. So as we can see, it's a clean slate here. Let's pull back a bit. Let's pull back a bit. Okay. So somewhere here. Let's see how that aligns. Okay. So that will be the first targets before we aim for that. All right. Four-hour confirmation. It's good. This bullish trend was insane though. But I wouldn't, like, I'm getting questions like, should I change my confirmation candlesticks? Should I use inside candles? But the answer is a solid no. Like, I know it's a solid no, because this still indicates the bears are very much, like, they're over 3 times as strong as the bulls. That's a losing bet if you ask me, right? So that means once out of 3 times the bulls will take over. That's that's the, I wanna play when I know the odds are in my favor. So this would have been a very risky move, but as you can see, sometimes it does play out. Now let's go to the 1 hour. Okay, the 1 hour looking like that. I don't really like how it sits. It's not really welcoming for me to look for opportunities, so I dropped down to the 15. Prices have bounced there. Okay, prices have broken below that low. That high. There. So should prices break above here, I'll be looking for a buy. Should prices bounce off here, I'll be looking for a buy. Jesus. Even more consolidations. Consolidations. Okay, prices have created a lower trend. Lower. Okay, so prices have broken above there. So we didn't get an opportunity again. But that's what bugs me. That's what bugs me. All right. So we already had confirmations down to the 4 hours. Once we got this as the confirmation, where could we have taken the entry? Let's slow it down, because that's what backtesting is all about, improving oneself. Like, if you can't improve during a backtest, what's the point? So how could we have caught this move? Okay, so I'm going to take it back again. We had a confirmation on the daily. We had a confirmation on the 4 hour, a clean break and retest. Obviously, past are the days that I used the 4 hour as my confirmation candlestick. If you're a swing trader though, you can use this as your entry, or if you're a position holder, you can use this as your entry. Your stop loss will obviously be below here, targets somewhere up there. Obviously, it will be a good risk to reward. But for us day traders, we need to go to the lower time frames. Okay, so that last time we were using 15 minutes, we came here 1 hour. I said I didn't really like it, so let's give it another chance and see how it plays out, because the 15 minutes, we couldn't catch a move on the 15 minutes. So let's see how the 1 hour plays out. So the 1 hour has failed to break here, retraced, let's pause. Okay, Jesus. We could have used this as our entry. What you guys think? On the 1 hour, so on the 15 minutes, we couldn't take the trade because prices were dancing too much around these two structures, right? And then this impulsive move came, but it still didn't break above that. With the one that broke, didn't really give us a retracement. But on the 1 hour, it's less noise, right? So you have that. It's as if prices broke above this trend line, and this being some kind of a retest, and then the bullish kicking in. This is right after New York. This is right at New York Open. So that means this is the bullish or the New York volume kicking in. So obviously, with the confirmations that we had on the 4 hour and the daily, this right here, I'd say would have been the best place to take the trade. Okay, so this right here as the entry candlestick. So let me redirect. Long position. Stops below there. Targets at 1, giving us a beautiful 1:6, 1:6.9. Stops being at 25 pips, so that means somewhere around here. At the most recent high, we should have been break even because it's about 30 pips. So again, this is also another aggressive entry. So if you ask me, the last time we checked, or the last time the markets were here, we didn't take the trade because it's not a conservative entry, and those are most of the entries that we take. So again, the one thing that we need to improve so that we can catch more winning trades like this is be a little bit aggressive on the lower time frames while looking for entries. If we already have the confirmations on the daily and the 4 hours, on the lower time frames we can be a little bit aggressive, just like here. So prices, we were risking 25, so that means that 75 is where prices would have been 3 hour, somewhere here. So that means I'll be starting to look to exit the trade. Once prices already give me 3 hour, I'll be planning or starting to look to exit the trade. So if prices just give me some kind of a momentum loss, I'm out. Let's see how it goes. Okay, the prices are still pushing. Okay, so once prices just gave me that doji, I would have been out. I wouldn't care, I wouldn't nah. I would have closed my beautiful 1:4. I'm out. It would have given me a 1:4. I'm out. Because if prices close with a doji, that indicates a lack of momentum. I'm a day trader. I want to catch while the momentum is hot. So once you start giving me lack of momentum, I'm out. But that is how I would have managed it. So I would have closed the trade full at 1:4. Let's see how it keeps on playing out. Okay, so prices are dancing around a bit. A little bit of retracement. A little pump. Okay, so all the way until prices hit our targets at 1:6. I would have closed at 1:4. Prices still pumped all the way to 1:6. This is the 1 hour. So once I see the momentum loss at 1 hour, I'm out. I wouldn't consider the lower time frames on a momentum loss because the lower time frames lose momentum all the time. But on the 1 hour, because I'm a day trader, I don't want to see the whole hour go by without prices having momentum. So if that happens, I'm like, okay, thank you for the pips, I'm out. But obviously you can see sometimes prices still go ahead and hit our targets even though we have closed out early. So it's part of the game again. It happens. So GU, yeah. So we took one aggressive trade, hit stop loss, another aggressive trade gave us 4 hour. So it's all a numbers game. As long as you win more, or not even you win more, if your winning trades give you more than your losing trades take, you'll always still be able to find that consistency and be profitable. It's a numbers game. So on the daily, prices looks like they closed with some kind of a bearish railing. And broke above that high. So should prices give us some kind of a retracement there, that's it. We're taking a buy, no looking back. Prices are pushing lower to our structure. Our structure has been hit. Will it give us a bullish momentum? Okay, so now we have a bullish momentum kick in, but it hasn't closed above this bearish candle, right? It hasn't closed above that. And if you look at the trend, the minor trend on this bullish trend, obviously the bigger trend is bullish because we have a low, we have a high, we have a lower high, we have a higher low, we have a higher high, higher low. But if you look at this minor trend on the bullish time frame, you can obviously notice that prices had a minor downtrend. So we need to make sure that until that minor bearish trend ends, we're not taking any bullish trades. So that means until prices break above this trend line, I won't be looking for any buy trades, if you will. Prices have broken above, not having that much bearish momentum. Bullish candle forming, bearish kicking, rejections. Okay, so prices have already broken above here, indicating that the bulls are the one that are having momentum right now, and they are looking to push the market higher. They've just reached there. A lot of rejections. So should prices break above here, obviously the next stop will be somewhere there. Hey, I've always been looking for this arrow since they gave the new update on TradingView, because the last time it was here, so I was always used to it for it being here. I thought they removed it, but they've moved it to this crazy. All right, never mind that. Excuse me. Now, okay, so okay, wait. This bullish trade, okay, we are looking for buys. Cool. So prices are now on this resistance. It's very risky, obviously, to buy before the resistance has been broken. And mind you, we are still in the 4 hours. So if you look at the daily, we need to see how the confirmation is. Okay, so on the daily, this kind of a bearish minor trend looks like it's almost over, because this was the most recent high. Prices created this kind of a high, and then prices pumped higher with the bullish momentum. So that means prices are most likely going to continue being bullish from here. But we still need confirmations to support our bias before we actually make any moves. So you see there's a range, a break, and a retest. So this will act as our confirmation, obviously. This right here will act as our confirmation, a break above this one right here. And then we'll need to go to the lower time frames. On the lower time frames to look for entries. Okay. So prices here pumped, retraced, and then are taking off. But that's not the type of retracement that I look for. Because last time you have seen, I said that that's not a retracement I'd look for. I want to see Okay. What's going on here? I want to see a break, retest, and that. This, I wouldn't really consider it as one of that. And I feel like on GU, it has most of these retests. That's why we didn't get a lot of trading opportunities. But prices are now retracing. So will they retrace all the way to here? They did. Pause. Okay, so they did give us a retracement. And this is what we should have used as our confirmation. Right there, with our stops below that, aiming for that. So it's a 1:3.28. So it's beautiful. We would have been aiming for about, we would have been risking about 38 pips. So right there, we should have been break even. So our investment was safe. So let's see how it plays out. Will it hit take profit, or will we be stopped at break even? Prices are pushing, losing momentum, but still bullish. Pumping. What happened here? Okay, so prices look like they gave a crazy bullish pump and then retraced somewhere here. Where did that close? Okay. 2.7. Okay, and then a bearish retracement. So if this bearish candle closes below this bullish candlestick, I'm closing the trade. Okay, so it didn't close below this bullish candle and our take profit was hit. So GU, another winning trade, 3R. So yeah, that's the importance, I believe, of waiting for a proper retracement. Even if we are being aggressive, we still shouldn't break our rules. Like, this isn't a retracement I'd consider valid. So a proper retracement came about because we were patient. We got a beautiful entry, prices pumped all the way until take profit. There we go. So GU, yeah, nice. I think we should just look for more entries on this, not just by being aggressive, just keeping our eyes out for it. So obviously, with all the trading pairs that we have on our watch list, it's only 2 pairs that for the past 3 months have proven to not be successful. That's UJ and CAD JPY. All the other pairs proved to be profitable and with very good results. We found ways to actually improve on our edge, even on the pairs that are already winning, so that we can have a sharper edge. We've seen how we can avoid unnecessary losses on pairs that we trade less, like USD JPY. It's a beautiful pair. It's just that we weren't really paying a lot of attention to it. I stated my reasons why, but we should be focusing more on looking for more trades on new pairs like USD JPY, GBPUSD, which is a beautiful, profitable pair. CAD JPY also, yesterday we saw that. But CAD JPY still boggles me. Like, how did we finish breaking it down very fast? I don't know. Still bugs me. But at the end of the day, we still saw that with proper trading with it, it can still be profitable. So that's our back test on GBPUSD, guys. It's a beautiful pair. It works with price action. Profitable, have proven to be profitable for the last year and has proven to be profitable in the last 3 months. So it's obviously a beautiful pair to be trading with price action. So I'd obviously keep on watching it. But again, on our game plan for the coming month, I'm looking to double down on the pairs that have proven to be profitable even through the hard times. That means more trades will be coming from Euro USD, Euro JPY, and GBP USD. I'm not saying that we're not going to be trading the other pairs. We are, but what I've learned is that if something has proven to be working in the good and the bad, why not double down on that and still trade the other pairs, but just not as hard as the ones that prove to be giving good results. That way, we can actually still have a sharper edge in the market and know that even with our edge, we are trading the pairs that are the best of the best. Because our watch list, there was a time we had 20 pairs. It's insane. It was crazy. Like once a candle closes, once you start going through the pairs, by the time you come back to the first pair where you saw the opportunity, pips have already moved like 10, 20. So I was like, okay, this is crazy. We need to reduce our watch list. So out of 20 pairs, we reduced all of the pairs and left only the 5 best performing pairs. Now, out of these 5 best performing pairs, we still need to double down and pick even the 3 best pairs, which will be GBPUSD, EURUSD, and GBP, EURUSD, and EURJPY. We'll be trading more of them than the rest, but we'll still be looking for opportunities on USD CAD JPY. So that's our game plan for the coming months, obviously. And what we've also learned through the backtest this week is that we need to be a little bit aggressive on the lower time frames once we already have the confirmations on the daily and the 4 hours, so that we won't miss out on many moves. We have left a lot of money on the table. Yes, we've been profitable, but we still left a lot of money on the table. So we need to be a little bit aggressive on the lower time frames to catch even more winning moves. Obviously, I'm saying winning moves because they have already given confirmations on the higher time frames. We have learned how to reduce our mistakes, obviously, by not following sometimes our plan. We've seen we did that on pairs like Euro JPY. We took a couple of losses that were against our trading plan. So had we stick to our trading plan, we would have avoided those losses. So that's something that we need to also be more disciplined on. Yes, we do follow our trading plan most of the times, but the times that we do slip up sometimes costs us, like the pairs that we took, the losses that we took on Euro JPY. 2 losses could have been avoided. That's 2R, right? On $100,000 account, that's $2,000. So such losses should be avoided by all means possible. And that's by being more disciplined to our trading plan. So with that being said, that brings us the end to our back test on GBPUSD. And as promised, for those that have sticked around to the end, I told you I'll also be talking about MyForex Funds, what's up with it, and what's my take on it, right? So for those that don't know what MyForex Funds is, MyForex Funds is a trading prop firm that has been like, it's one of the biggest prop firm because it's been in the industry for a while, I believe since 2020 or so. And yesterday, I don't know what happened, but all of the accounts that anybody that had an account with MyForex Funds, actually just the markets were frozen, like you couldn't do anything, right? And an hour or two later on, they gave us a notification, an official announcement on their website. So let me share with that what really happened. So it's crazy. It's crazy. It's crazy what's happening out there. Because MyForex Funds, it made me realize one thing though. If this can happen on MyForex Funds, because MyForex Funds is one of the biggest prop firm, right? If this can happen on MyForex Funds, that means it can happen to any trading prop firm. So we need to be very careful, guys. I'd say diversify. I'd say not just in trading, but if you can invest in other aspects outside of trading, just make a lot of money through trading and diversify. If you're going to diversify that by taking the money and reinvesting it in your personal account, do that. If you're going to take the money and invest it in other assets, do that. Because nothing is permanent. So this was what they sent out on their official website, traders. Yesterday, we learned that without prior notice or discussion, provincial security regulators in Canada and commodities regulator in the United States issued orders preventing us from trading securities or accessing funds in our banks. So this happened without prior notice or discussion. It just happened. They didn't have access to their capital no more, right? Until these freeze orders are lifted or modified, our business is effectively at least temporarily frozen as well because they can't pay. We've been reaching out to regulators to discuss their concerns. It's the first court date to determine whether to unfreeze the orders or lifted or modified is scheduled for September 11 in the US and another hearing later the same week in Canada. We hope this matter is resolved as soon as possible and we'll update this message as events occur. So that means we'll be getting updates right here on MyForex Funds, on the official MyForex Funds page. But my take on it is that I believe the charges will be lifted. And the reason is because I believe MyForex Funds is one of the biggest prop firm. And this is the one, in my opinion, is the one that has the most traffic. So obviously some regulations, they'll always, like anytime you become a big shot, like these financial regulators will always try to hit you with something. And a lot of people are asking me if this is some sort of a Ponzi scheme and if they're going to run, because obviously there've been a lot of Ponzi schemes lately, but I don't think so with MyForex Funds. This is just my opinion, by the way, because MyForex Funds were actually giving out statistics of what the traders were actually making. And it actually shows a lot of traders were actually losing funds through the challenges. So its module or its running system was actually profitable. So there's no way in hell would it have been a Ponzi scheme because it was a profitable module, like it was a profitable system. They were making money. So there's no way in hell this is a Ponzi scheme. So I know it will come back, but I'm not sure how long it will take them. Because with these financial hearings, right? Now it's said it's scheduled for September 11, but you may find they may not reach a conclusion and say it's rescheduled for, I don't know, November, December, January, who knows? So if you had an account with MyForex Funds, I'm telling you not to worry, don't panic, because I believe eventually everything will be okay. But in the meantime, I'd advise you to get another prop firm. Trade it slowly. If you're going to take an accelerated, like that's instantly funded, or you're going to take another evaluation stage, just do you, but don't they sit there waiting for September 11 to see what happens, and then maybe it's postponed and then it goes to another, move on. If it's going to come back, it will come back, but it won't find you where it left you. Always progress, always move forward, accept what's there, because this is our current reality. I also had accounts with MyForex Funds, but luckily I also had accounts with other prop firms such as MyFundedFX. So it has hit me too, but it is what it is. I believe it will be unfrozen, but will it be at September 11 or further? Nobody knows. We just have to wait and see what were the charges, if they will tell us what the charges are. So if the charges are actually serious, then it might be later on. It may be later than September 11, but if the charges aren't too serious, they may obviously be squashed right there at September 11 and get back to business. But there is no point in sitting around waiting for them to actually give you the statement. Get another prop firm, move on. If it comes back, which I believe it will come back, but it shouldn't find you where it left you. We need to grow, we need to evolve, we need to advance, we need to move on. That's my take on MyForex Funds. So again, with that being said, guys, I appreciate you being here until the very end. It's been a crazy week, a back testing week. We've learned so much, we've grown so much. This weekend, I'll obviously be reading a psychology book by Mark Douglas, Trading in the Zone, to get my psychology straight back. And then by next week, we come back September stronger than ever, ready to kill the market. So till then, guys, I appreciate your time. Thank you for being with me this whole week. It's been a blessing. It's been quite a journey. So I really appreciate you. Thank you to JJ. Thank you, Federico. You never miss the session. Jean, Candice, I appreciate you guys showing up. Everybody that showed up throughout the week, I really appreciate you. Let's kill next month. Till then, guys, I appreciate you all. Take it easy out there. Peace.